G'day everyone, welcome back to Pete's Investing. Today is June the 7th, 2023. This is the Aussie US currency update. We were in a bearish momentum on our weekly and it's broken up into a neutral and is currently in a bullish momentum on our daily. So let's look at that, but just be warned, we're looking at a divergence on the hourly. So first off on the weekly, because of these bullish candles, it's broken up into a neutral positioning after being bearish for a couple of weeks. And that's with a triple moving average of the price chart and the moving averages of the CCI 150 not quite aligning. On the daily chart, the same indicator is showing a bullish momentum with this quite strong bullish candle yesterday. But notice we've got a bit of a potential shooting star happening here, and that may cause a bit of an issue in terms of going long. So we may see some decline in the short term. Going to the hourly for a bit more view outlook on this, you can see here a couple of things happening. There was a Fibonacci drawn here, and you'll notice here it's at the 61% level at the moment, the price is. And in addition to that, we've got a bearish momentum on a CCI that's still in play versus a bullish momentum on the price chart. So the way this may work is in the coming hours, we need to see for this to work, we need to see the CCI continue to the downside. And then we need to see the price collapse down to below this channel, and I'll draw a channel to highlight where it should break before taking any short trades. So you look at the channel in that divergence range from the highest to the lowest candle range. So if it breaks below that, and then using, again, that coincides with this 61% on that wider Fibonacci range. But to look at a potential short-term target, you would draw a Fibonacci between that low and that high, assuming that was the highest it's going to get to, and it starts collapsing from there. Of course, if the price keeps going up, then we readjust these parameters. But if that the price started turning down and it broke through this channel, our initial target range would be in that first Fibonacci level at the 38% retracement, down to at least from the 38 to the 50, and obviously if it breaks below that, we're going to see further declines, but that's our initial target range if it breaks below this channel. So to understand, I'll also, while we're here, always need to look at these back tests. We've got a bullish back test here and a bearish back test here. You can see here as the price was declining, the bearish back test was just entering single trades and doing quite nicely, and it still is, whereas as the price was declining here, the long positioning was adding and averaging down. We don't use stop losses. And the way to avoid entering those trades, as I always say, back here in April 2022, go back to April 2022, back here, you can see that during that decline, and also during that decline on the weekly, there are primarily bearish signals on our indicator. And there were a couple of long signals there, but again, to be more confident, you trade only when the weekly and the daily align. So with those bearish signals there and those bearish signals on the daily, you take primarily short trades on the hourly. So to understand this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.